We are fortunate tonight to have Nicholas Gibbs yet again. Yes, he's shown up, I don't know, 3 out of the last 4 weeks or something like that, or 4 out of the last five. I'm not sure. One time there was something about air traffic somewhere in the country that was giving him some problems, but the weather's okay. Your tree's doing well.
Doing good, doing good. And, that Florida weather does you some good.
All right. Well, listen, we have really breaking news tonight. I mean, it broke a couple of hours ago. This has given me a chance to really dig into it, to take a look at it. But I do have to make a disclaimer first before we start, a very big disclaimer. I am a graduate of law school. I have not sat for any law board anywhere in the country. So I don't belong to the Bar Association. I'm not a lawyer. I don't give legal advice. I will be giving my business opinion about legal matters. And this is something I need to say so that you don't sue me because we're going to be talking about legal matters. And of course, neither one of us are investment advisors. And so this is also not investment advice. Now, why do I need that big disclaimer? Well, Tesla actually wasn't even really sued. They were kind of a sideline on this thing. But Elon and the board of directors that was sitting at Tesla at the time has been sued and lost over the compensation plan. So this is kind of a shocker, don't you think, Nicholas?
This is perplexing on a number of fronts. I mean, you know what? Elon was right. The most entertaining outcome is the most likely outcome. And
Right.
this is entertaining on many fronts for sure. And I'm sure we'll get into those in a second.
Yeah, so I think what I want to say here is I believe this will be appealed. First of all, okay, let me back up just a little bit. This is this decision by the Delaware court voided his compensation package, which he had not begun to take yet. He earned it, but he had not begun to take his options, which were worth on the order of 55 billion, I believe. That's the number right now. Of course, it changes every day based on what the stock is doing on that day. He wasn't going to begin to take these for years, but it's been voided. This is not something that can be reconstructed because it's not something that you can get into an argument with the other side and say, "Hey, how about this?" And you go back and forth and make a decision. She voided it. She set it aside. She says it is completely void. The reason you can't reconstruct it, of course, is because you cannot get the board that was sitting then to put together a new package and then take it before the shareholders who were then the shareholders and ask them to vote again. So this is not something that can be fixed by adjudication. All right. Which typically in almost all of the kinds of lawsuits, that's what you could do in this situation. So the judge in this case could have come up with a fair compensation plan. She said she didn't know what fair was, which right there to me says that's the first basis of an appeal. She didn't even know what fair was. If you don't know what fair was, then this can't be unfair, almost by definition. Does that make sense to someone who's not a lawyer?
Hey, I may be a lawyer. You don't know it. Um, yeah, so I it's just complicated on many fronts, but I would agree with you. By definition, that just it contradicts itself, right? It's like me saying that you're guilty, but I can't prove you're guilty. I just know you're guilty.
I
Okay,
just
well then
know. Yeah.
how?
In
Just
my
how?
knower. In my knower.
Yeah, just yeah. You know I'm not innocent. And I'm guilty. You just don't know how I'm guilty. Like that makes no sense.
Yeah. So if she says, and this is true, this was potentially the largest compensation plan in history and turned out to be so. It was unprecedented, as was the way that the thing was constructed in terms of Elon getting paid out in multiple tranches based on performance. This is not how CEOs are typically compensated because they want a certainty in terms of their compensation. They don't want to think, oh, I might not get zero. I might get zero. That's not the normal way of compensation. So she's basically knowingly, and she says this, I'm treading in a territory where there's nothing that I can do that has precedence. So if you are wading into an area where you know there's no precedence and then you say you're going to throw it out completely without giving an opportunity for any kind of consideration of what fair might have been, then to me, you've completely eliminated yourself as a judge. You're no longer judging. You are really basing it on feelings. I feel that it's unfair. All right, let me take it to the next step though. And these are maybe more important steps on appeal, although I think that's a great way to appeal it. Her real decision came down to that the board of directors was beholden to Elon. So they basically rubber stamped the compensation plan that he had recommended. They didn't spend enough time and energy thinking about alternatives or ways to modify it in some way that would be more fair or more reasonable or something to the company or to the stockholders. And yet she doesn't say, here's what they should have done instead. Why? Because there is not normally this kind of compensation plan put forward. So it's like, how does she expect the board to say, oh, well, it should have been 0.9% instead of 1% in each tranche, or it should have been based on this kind of an increase rather than that kind of an increase when this is an unprecedented approach to doing it. Thoughts?
So yeah, so let me just ramble here for a second.
Sure.
So here are my thoughts. First of all, everything you said, I think is spot on. The bigger problem is that it seems like they are saying that it's not a fair compensation, not necessarily because of the amount of the package, but more so because of his relationship with the people of the board, which seems kind of crazy to me because we know who they are. Shareholders vote on this. We have annual meetings where you can go to the facility. You know who the board members are. Everybody knows Kimball's on the board. I mean, like everybody knows these relationships. It's not a secret. It's not some secret society that nobody knows about. It's transparent. It's out there. Furthermore, in order for him to receive this package or to be able to exercise it, he had to wait 5 years. 5 years. That's plenty of time for someone to contest. Adding to the weirdness of it, the person who brought this lawsuit is somebody who was like short 7 shares or 9 shares, whatever the number is. It's less than 10. All right. So the fact that somebody could have this much power, this much influence in this manner seems very asymmetric and inappropriate in many ways. But regardless, right? Even if you own 1 share, you have your right to protest, and fair enough. But again, the judge saying that it's not fair, but I can't explain why, and I can understand that. Hey, maybe it seems sketchy with the relationships and all that, and the compensation you came up. But even on that, shareholders still had to vote for it. Everybody knows who's on the board. Everybody, has to vote on the package. People voted on the package, overwhelmingly accepting it. And then there's a 5 year, uh, wait period before anything can be done. So it just seems ripe for an appeal to me, especially, again, going back to your point where you're saying that it's not fair, but I can't define what fair is. I don't know what fair looks like. And to put it back onto the parties to decide an amicable resolution just seems insane. You're not, to your point, judging. To add to the weirdness in all this actually benefits Tesla shareholders. That's the weird thing in some ways, right? It benefits Tesla shareholders because now there's less shares outstanding,
Less
right?
potential
So,
share.
yes, so that benefits us. Weird, right?
Yes.
However, it could be bad for us because, as is stated in the 10K, how valuable Elon is, which again, it seemed like they put a little extra emphasis on it on the 10K than they normally do, which may be as they were expecting this. And so they might have put a little heavier weight on that for future appeals.
Mhm.
But this is actually, even though on paper it may benefit shareholders, in the long term, the bigger picture, if this pushes Elon out of Tesla, if this maybe makes him less motivated to continue to work there because he's working for free technically right now, then that's bad for shareholders, right? Let me add one more weirdness to this. If that wasn't enough, that really this is going to benefit shareholders, but it's also potentially not going to benefit shareholders. Now what happens? This could get appealed. This could take years. What happens to Elon's next package? How does that work out? Well, again, they're going to have to be even more governance heavy, if you will, with this next package, which in many ways could benefit us as shareholders because his next package will be even more difficult or have more parameters or more, again, governance and disclaimer. To add to the peak of messiness into this, right? Just to add, like, why not add another wrinkle? And to me, this is going to become the bigger thing. President Joe Biden has had this lash out against Elon for quite some time now, right? We've known it. He said he needs to be investigated, he needs to be looked into, all that. Well, this was a verdict based off of a Delaware judge in Delaware where Tesla's incorporated. President Joe Biden's home state, Delaware. This is a presidential election. This adds to the messiness of it. Elon owns X now, formerly Twitter. The story just, I mean, you couldn't write this up. So I don't know what to think about this. I think it's clear that he's going to have to appeal, but he may not. I'm not sure. Either way, if he wants 25%, he's going to have to appeal because this is going to take away a huge portion of his allocation set 25%. So I don't know. I don't know what to make of this. I mean, yeah, I don't know. I said a lot there. What are your thoughts on it?
So I like your analysis. I think you're right on almost basically on everything that you said. I did want to make one more piece of the puzzle in terms of the legal side of it, is that she also said that the shareholders, and I think this is probably her strongest point. She says that the shareholders were not properly informed in order to make an informed vote. It turns out 73% of the shareholders voted in favor of this. And by the way, that is 73% of the minority shareholders, does not include the like Elon Musk's shares, et cetera. It's the minority vote. They voted 73% in favor. They were given information about what was being voted on. And she now makes a claim that it wasn't informed because, and she lists a couple of reasons. I think her reasons were not that great. I might be biased on that, but the reasons I don't think will hold up on appeal.
What were those reasons? Do you know off the top of your head?
I think it went back again to explaining the details of the relationships that Elon had with the board, that wasn't made as clear as it could have been made, that they had these close relationships, that there was deep friendships where he might have been a powerful influence on the situation. And I forgot I actually forget right now what the other one was, but there was 2 or 3 things that she said was not enough information for them to make the vote, because she said in defining fairness based on the previous court cases, if you couldn't define it any other way, you define it by the fact that the minority shareholders had a chance to vote and voted in favor. So she had this one chance to finally say, well, they did take this opportunity. They did give the minority shareholders a chance to vote, and they voted 73% in favor. She even went so far as to declare that that was not fair because of they weren't given the right information. To me, when you come down every single time in favor of the plaintiff, I have a problem. When you've got to make tight decisions and every single tight decision you make says, nope, I'm going with the plaintiff, I think that just to me screams bias. Her bias was probably shown by quoting the plaintiff in the very opening paragraph. I don't remember the exact quote, but it was something like, why did the richest man in the world need another $55 billion? That was the opening line. And to me, it set the whole tone for the bias that I think was in there. I don't care whether it was because she lives in a Joe Biden state, whether she's a Democrat, whether she was appointed by a Democrat, none of that. I mean, all of that could possibly have played in, I think it's showing an underlying bias more than anything against the richest man in the world and looking for an opportunity to to not give him this 55 billion. So that's where we are right now. I don't want to spend the whole hour on this because we got so much more to go to, but the stock is down about $7 in after hours. Last time I checked, um, probably going to be a few days of confusion about it. Probably going to be some uncertainty about it, but I do want to say I agree with you. I think that it will be appealed. I definitely think it will be appealed, and I think it will be appealed partially because Elon Musk will not be angry about the 55 billion. He'll be angry about the decision, and he will be competitive enough to want to appeal this. And he, by the way, is one of the defendants. Individually, he's a defendant. So even if the rest of the board members decided they weren't going to appeal, Elon could appeal on his own. And I don't think there's a chance in the world that he's not going to go after this judge.
Yeah, I'll just leave this topic on this. The asymmetry on this is palpable. Joe Biden state, election year, Democrat judge, Democrat state, Delaware, just everything against Elon. The fact that you're claiming that people didn't know about the relationships, like that's crazy. The shareholders voted for it. Even now, shareholders would vote for that again,
Yes, they would.
no matter what. It's the asymmetry is palpable. I think he will appeal. I think he will drag this out till it gets to Supreme Court level. I think at that point, the Supreme Court would vote in favor of Elon. And that's got nothing to do with the fact that it's a heavy Republican uh, uh, Supreme Court. I just think to your point, or to our point, to everybody's point, like this is anti-capitalism at the highest degree. And I think Tesla will reincorporate out of Delaware. And Elon, in the meantime, while all this drags out in court, he will be given a new package, and it will essentially be a big FU to the Delaware judge in their ruling.
How do
That's
you really
kind of
feel?
what.
How do you really feel?
Well, I mean,
I got,
I'm echoing my inner Elon. I think that's how Elon feels right now.
exactly. All right. So Gary Black puts out his 2030 estimate today, not his 2024, not his 2025. He put out his 2030 estimate today. He's already done his 2034 and 35. So he put out his 2030 estimate today. He gives Tesla a value of roughly triple today's value. A stock like that, anybody would want to own. If he's right, tripling in 6 years, pretty much anybody would say, I would like to have some of that. But he assumes substantially lower sales on cars and energy than Elon is projecting. He has no value at all for Optimus, FSD, licensing, robotaxi, and I don't think he has anything in there for semi. I asked him that question, and he hadn't gotten back to me at showtime. While he has earnings up 700%, he assumes that the PE will back down to 30 times, similar to others in the Mag 7 at that kind of level. Thoughts about Gary's analysis?
I mean, again, I like Gary. I've been on many spaces with him. I've been on many YouTube streams with him. I think he's a good guy. I think he's a great person to have in our community. I love that he engages with us and that he is a more or less independent thinker. And I do think he goes against the grain of general analysts and Wall Street. But with all that said, I think he is very myopic. I think he still has too much of the traditional dogma of Wall Street in his thinking. Um, I don't think Elon's going to be right per se on his numbers. I think Elon tends to be a little optimistic, but I think Gary's way off the mark here. I mean, he just says things that history has just proven to be uh, you know a fallacy in his thinking. He believes that once autonomy is solved, it'll be many people solved at the same time.
Yeah.
Just not the case. I mean, you try to use ChatGPT as your argument, as a parallel, but the difference there is the data for that is available to everybody. The data for autonomy is not available to everybody. The vehicles aren't available to everybody. The manufacturing is available to everybody. One is techs in, techs out. This is photons in, controls out, right? It's just not even close to the same thing, but he doesn't seem to understand that. I also think that Gary is he he just I don't think sees the potential of FSD and robotaxis. He doesn't see the potential of humanoids, and it's fine because most people don't.
Oh,
And
yes.
that's what makes a market, right?
Right.
That's why we've all become as wealthy as we are. Or I think you, who maybe you didn't get the whole run up in Tesla over the last decade, you will become wealthy in the long term because this is why. People didn't think electric vehicles could be what they were. People didn't think a auto company could make this type of gross margins. People said the same thing about Apple when the iPhone came out. Nobody's going to pay $1,000 for a phone. Every single time these these preconceptions of what a market is, what it can be, what it should be, how it should be priced, become wrong, wrong, and wrong, right? And so my argument to everybody: don't listen to me, don't listen to Randy, but look at who's been right over and over and over. Okay, the people that we see out there who put big money on the line, right? The Ron Barons of the world, right, over and over and over. Elon Musk, the greatest allocator of capital of all time, has been right over and over and over. Tell me this: how does that guy have such an accurate prediction of the Model Y, saying that he said, I believe next year the Model Y will be the top revenue producing vehicle in the world, and the following year it'll
The
be the
units.
top selling vehicle. He said that way ahead of time. There was nothing that looked like that would be the case. Nothing. They said that couldn't happen at a $50,000 vehicle. Said it couldn't happen. Randy,
It
did it
happened.
happen? I think it happened. So again, this is, I'm long in the tooth here, but this is what Gary misses over and over. And to be frank, again, listen to the people who've been right. To be frank, Gary's prediction that he lists for catalysts,
Or,
none of them have been a catalyst, not one. So who are you going to listen to? A Ron Barron, an Elon Musk, or Gary Black? Again,
yes.
love
Yeah.
Gary, but
Right. So Gary conflates two things that commonly troubles me. He conflates the idea that Elon is commonly late with a new product or a new concept related to a product, but Elon doesn't miss when he gives product number when he says what the numbers are going to be. So he said in 2016, 500,000 vehicles in 2020, 500,000 vehicles in 2020. He said in 2020, actually before 2020, we will increase by 50% per year, year after year after year. Some years will be a little higher, some years a little lower. That was in either early 2020, late 2019, and he's hit it for 4 years in a row. Well, 3 years in a row. And this year, he specifically said in 2023, it'll be 1.8 million. It was just barely over 1.8 million. I mean, he hits the numbers. So he's talking about 1 terawatt of energy storage in 2030. Until it's impossible, I'm going to believe that he has a good reason for coming up with that number. If he says 20 million vehicles in 2030, until I can't see it, until it becomes impossible, I'm going to say, yeah, okay, that's the number that we're going to get to. If he misses either one of those by 10 or 20%, he'll still be double or triple what Gary's saying. So,
yeah. I mean, like let's just be objective here, okay? Just be objective. Do you really think that Elon just came up with these numbers off the top of his head? Or do you think he sat there and said, okay, well, this amount of batteries, we'd probably need about this amount of plants or this amount of suppliers, this amount of megapack facilities. Okay, how much can each put out? What would that look like? Okay, could we get to that? Okay, yeah, I think we could do that. Cars, same thing.
yeah,
Okay, this how many lines we would need, this how many it would be, this how many we'd need from these different segments. Can we hit that? Yeah, we could. Right? Like he knows that, and we don't. We have no idea, right? But he does, and he knows what they're willing to invest and where they want to build and how many they need. So he has all that insider knowledge to make these statements, right? Optimus, he's talking about next year being able to
yeah,
sell them,
yeah, yeah.
right?
Hopefully lease them, not sell them, but anyway.
Yeah, good point. and then again, FSD. All right. Look, let's say that he continues to be off and overly optimistic. What we're seeing right now with FSD 12. All right. Think about this. This evolution to where we are now with FSD 12 happened over 3 years. 2030 is really 7 years away,
Yeah.
right? Well, no, 6 years away, but
Yeah.
it's 6 years. What do you think happens when you 2x? Like that's insane. The progress is going to be insane.
Right.
So it just, you're right. He conflates it. I just don't buy it. But hey, I love Gary. He's a
That's
good
right.
guy.
No, he's a good guy. By the way, I agree with you 100% on that. So let's turn to the general business climate, the general market. The S&P CoreLogic Case-Shiller 20 City House Price Index rose 0.1% in November compared to the previous month. Home prices in the 20 major U.S. metro markets were up 5.4% in the last 12 months. And a broader measure of home prices, the national index rose 0.2% in November and was also up 5.1 over the last year. And these are all seasonally adjusted. Normally, house prices don't go up in November, even in a good year. But with the shortage of units available, the shortage of residential housing available at historic, I mean, we're talking about super historic lows and not enough, nowhere close to enough new housing coming on the market. Are people starting to sell? It's not totally surprising to see the prices. Oh, and mortgage rates going down. This is not terribly surprising. What do you think happens to the housing market going forward? Are we going to see a continuing uptrend in prices, or what do you think?
There's only one path for housing, and that's up and to the right. There's no other path for housing. All right. Supply and demand. There is no supply. And with these interest rates, there's even less supply.
Right.
Demand is huge.
Yeah.
It's huge. Okay. And the Fed can't fix housing. There's nothing the Fed can do to fix housing. Raising rates, all that does is reduce supply.
Right.
Dropping rates, all that does is increase pricing. There's nothing they can do. Absolutely nothing. The only thing that they could do to make any real change to potentially the positive is to drop rates, because
Right.
then people will feel like they could move and sell and all that.
They wouldn't
But
have the
even
golden handcuffs anymore. Yes.
Yes, exactly. But even then, we don't know if that would bring on enough supply to combat against the amount of demand, right? Because when you drop those interest rates, well, then all of a sudden you get more flood of people in there. But as you drop those interest rates, people, will raise the price of their house. So the Fed can't fix this. This is
Yep.
purely going to have to be fixed by increasing supply with home builders and people wanting to sell their house and people feeling wealthy enough and feeling that they can move up to another house, right? And that's going to be the majority. I mean, some people will be downsizing, all that. Sure, that happens. But I would say the majority is people feeling that they can take on more debt or be able to afford a better place, or, just feel that they can do it comfortably. So the Fed can't fix it. This rates will not be dependent on this, other than the fact that you see someone like Senator Elizabeth Warren that is screaming at the Fed to drop rates to make housing more affordable.
Right. I just realized something that maybe I don't know if anybody in Congress has been thinking about this, but I don't know why they wouldn't, but it's the first time I've thought of it. One of the ways to make more housing available would be to do something about the horrendous capital gains tax when you sell a house, because seniors are not going to sell I'm not selling it. I got 3 houses. We're not selling any of our houses. They're going to be turned over to my kids. They're part of their inheritance, because I'm not going to pay that capital gains tax. That house, my one house cost me 395,000. It's now worth 1.6 million. Can you imagine what
No
the
way.
number would be on that? So
Yeah.
anyway, yeah, you got no. So that's one thing. Congress, there's an opportunity for you. You could do something to lower the capital gains tax on residential housing, maybe only for 10 years or something. Let people, or 1 year or 2 years or 3 years,
Yeah.
somehow
It,
let people get out of their homes without having to pay that horrendous tax.
yeah. And to Randy's point here, like what he's talking about is, unless you've lived in the house for 2 out of the last 5 years, you have to pay tax on anything over 500,000 if you're married, quarter of a million if you're not. But after that, if you had it for investment property for X amount of time, you're gonna have to pay capital gain taxes on that,
Yeah,
right? So why would you take that hit? You're better off depreciating it, renting it out, than selling it, and you can just take the equity out of it and not have to pay any taxes, right?
right.
It makes no sense. So you're right. I mean, a great thing that they could do is essentially have really no capital gain tax, or just drop it very low where people are
Right.
like, well,
Yeah.
all right, I'll pay a little bit of capital gain tax to be able to roll this into something else. Why not?
In another part of the economy, we've got January's increase in consumer confidence, likely reflecting slower inflation, anticipation of lower interest rates ahead, generally favorable employment conditions, continues. Companies says here companies continue to hoard labor. I don't think companies are hoarding labor at this point. I mean, that doesn't mean that they're started laying off en masse yet, but I think they're more comfortable with getting rid of people if they need to. And so the gain was seen across all age groups, but the largest was for consumers 55 and over, feeling very good about the future right now in terms of consumer confidence. Surprised that the consumer confidence is going up at this point?
No, not at all. Because to your point, clearly inflation has been done, right? Even trueflation's at 1.76 as of today, right? Inflation has been done. The Fed needs to start moving. I'm not saying they have to do this meeting, but in my opinion, without a doubt, in March, I've been saying this with you. I think they have to move. They're going to move aggressively. I don't think it necessarily will be at a meeting. I think what will unfortunately will probably happen is something will happen. They'll get spooked. They'll cut rates hard. Um, Hopefully, it doesn't come to that. Hopefully, they can say, okay, job well done. Ideally, job well done. Let's start slowly cutting rates. That would be the ideal situation, right? But it's like this curse, right, of the Fed, where it's like we've come this far. It's not enough. It's not enough. I mean, the fact that after the December meeting, they're still talking about there's still potential for more rate hikes. Like, what are you looking at? What are you looking
Not the
at?
same
You
thing I'm looking at.
no, it's like every time they've been saying they're data dependent. They're data dependent. The data is under 2%. It's under 2%. So I don't know what else you need at this point.
Well, I'm
Uh,
going to give you another theory in a few minutes. Let me finish with this last piece of
okay.
data, and we'll look at a little slightly different theory. I'd like to get your take on this because I know you feel strongly about it. So, according to MarketWatch, job listings rose to 9 million in December from a revised 8.9 million in November. So this was an increase, which is the opposite of what the Fed's looking for in the number of job listings. The total number of people quitting jobs, meanwhile, fell again to 3.4 million, which is actually a positive thing for the Fed. If fewer people are quitting, that means they're a little more nervous about quitting and taking on another job. And then we've got the job quitters. Oh, I'm sorry. Most of the new job openings were in white-collar professional occupations. They also rose in manufacturing and healthcare. And then the number of job openings for each unemployed worker was unchanged at 1.4. And that's a ratio is down from a peak of 2% in 2022 and almost back to pre-pandemic norm of 1.2 or so. Again, I'm questioning their numbers here. They should have gone back and done the research. It has never been over 1%. One for one until just before the pandemic. It's normally more like if there's a million jobs, there's a million two looking for them. If there's or a million three or a million four, sometimes it's as low as 0.6%, or 60% of the number of jobs available compared to the number of workers. It's usually the flip of what it is now. But anyway, because I went back and looked at the records, so we've got that situation right now. So the jobs numbers are maybe a little too strong for the Fed to take a move.
So I think that's silly anytime people really bring this up. It should not be seen as a bad thing economically to have a lot of job openings. And it's very I don't know, it lacks nuance to say, well, we have this amount of openings for this amount of headcount. All right, fair enough. Once you just peel one layer of the onion away, you can realize, oh, well, these are very specialized workers or people that have certain type of degrees or need to have certain experience, or people that we need to do certain dirty work, that we don't have, right? Construction work, blue collar work, or specialized software work, right? You can't just develop these out of nowhere. And so, of course, we're going to have the headcount open for those jobs. But even then, having more jobs than what we have people for is a good thing. All right. People make the argument, well, oh, well, that's when we have wage prices go up, and then that leads to inflation. That is a, I don't know where this correlation came from, but it's unrealistic. Listen, you have a huge gap between the price of housing, the price of food. All of that has gone up more than wages have. At some point, wages have to come up. It's good for wages to come up. You want that. That's the American dream. That's the point of it, right? So I don't know where this I don't know. It's just conflated to me. I don't think it should be seen as bad. And on top of that, companies will leave job openings open intentionally. They'll do it intentionally. All right. I work at one of those companies where they'll leave it open. I'll know for a fact that there's an opening, but we don't actually have the headcount for it. We don't have a rec open for it, and we're not hiring for it. I mean, maybe I'm misinformed, and I don't even know what my company's doing. But
No, this was rampant. A year ago, a year and a half ago, it was rampant that they had lots of job openings being shown. They had stuff that they had up on Ideal. What's it called? I forget now. What's the place where you put your jobs up?
Indeed,
Indeed, that's it. Or on LinkedIn or whatever. And that they didn't have any actual openings for that because they were just desperate for workers and wanted to make sure they had their hand their
yeah.
their
You want applications coming in. You want
right,
interest
right,
coming in,
right.
right? You don't want us to go out. You want them to come to you. And so the more you have open, the more you have people coming knocking at your door. It's smart.
Yeah. So the last part of the news today was that we had a bunch of earnings reports, and we're not on this channel. We're not taking a look at Alphabet and Microsoft in specifically, but I think it's good to look at the general what happened today. So Alphabet and Microsoft earnings came in very, very close to expectations. They were both counted would normally, I think they were both counted as beats. Alphabet being punished in the after hours, Google being punished in the after hours. They're both down even more than Tesla is with the problem that they had today with this lawsuit. So we got AMD beat barely. I didn't look to see how they're doing in the after hours. We had Starbucks missed, but it was mostly because their sales were down in foreign markets, not in the domestic market. But kind of all over the place in terms of where the numbers came in today. None of these were big beats though. Uh, Gary, Larry Goldberg said on the program last night on Good News Monday. He said the whole season the beats are happening, but they're really small beats.
Yeah, it was interesting to see some of these earnings. The market's sitting there at all time high. Microsoft all time high. I mean, all these companies, Meta, they're sitting at all time highs, and you would think that at some point the earnings have to come behind it, but I don't think they necessarily have to. I think a lot of these all time highs are coming from on the back of anticipation of the Fed cutting. As we know, the market tends to run 6 months before the Fed starts cutting. We're in that we're in that window right now. So I think this is kind of right on time, right? Just as predicted, just as history has predicted. And people are anticipating because once the rates start getting cut, that's going to stimulate growth. It will stimulate taking out debt. It'll stimulate companies going out, feeling more comfortable to open up their balance sheet. Right now, everybody, I mean, not everybody, I guess, but companies like that are interest rate dependent, like a Tesla, they're still bad. They still have the hatches batted down. They're not going to open them up yet. Not until we know the Fed's cutting and we know how fast they're going to cut, how hard they're going to cut, and are they going to cut soon enough, fast enough, adequately enough, right? They're not going to alleviate. But as they start, that kind of opens up the relief, right? The relief pressure to allow more investing and open up the aperture of what we can do. Right now, people are trying to get ahead of that by buying into these companies. So I'm not too surprised, right? I don't think earnings need to follow it. People are predicting earnings are going to come as rates come down.
Right, right. Okay, so here's my theory, my new theory. See what you think. All right, so the Fed's going to make a decision tomorrow. 4% of those that were polled think that they'll cut rates tomorrow. It's down to like 25% for March, but still very, very high for May. All right, here's my theory. Current interest rates are not that high historically. You and I have talked about that before. I mean, a 6.5% mortgage, pretty normal. Interest rates, treasuries at 5%, pretty normal. Businesses and consumers have found methods to deal with that because, again, it's not that high. If it was 8%, 9% mortgages, yeah, whole different thing. The economy is doing fine, obviously, with rates at these levels. 3.3% increase in the GDP last quarter, 5.1 the quarter before that. So the economy is doing fine with the rates at that level. The equity markets, as you just said, all-time highs. Unemployment is fine. So I'm wondering if the Fed might be going, you know what? Why move before there's any kind of a mess?
Because once you realize there's a mess, it's way too late. You cannot move fast enough. It's a blunt instrument, right? We seem not to want to say those words anymore, right? When on our way up, it's a blunt instrument. Oh, we have lag effects, right? We can say all that on the way up, right? And when we're holding, but apparently that doesn't apply when we're coming down. It's a blunt instrument still, even when you come down. It still has lags and time delays when you come down. So when you know that there's a crack, when you know something's wrong, it's going to be way, way too late, right? It's just like when you're driving on ice or, you hydroplane. When you start turning that wheel, if you go one way and try to go back the other way, there's lag effects, right? It's the same if you're going up or if you're going down. So I do think that the Fed will cut in March.
Okay.
I think it'll happen. And to be honest, I think a lot, I think part of the calculus is the political image that this could have in an election year.
Could be.
But people like Elizabeth Warren, I think, are actually providing some coverage
Yeah, yeah.
for Jerome Powell. So I think this could be a good thing. And the reason I say that is because Jerome Powell is known to be a conservative,
Yeah.
not a Democrat. Obviously, cutting rates could be seen as trying to help Biden, but then you could draw in his political. But so at this point, it's like, okay, it just all becomes a wash. So he's going to have to cut, in my opinion. They are just so overly restrictive now. And
Right.
even then, to your point, we're getting more and more restrictive every single month because inflation is coming down and rates are staying up. So by nature, that delta is growing and it's more head pressure on the economy. And so what would be the problem with cutting? Like this whole notion of historic norms for rates. Historic for what? In what era? Historically, we haven't had social media. Historically, we haven't had smartphones. Historically, we haven't been able to communicate as fast as we can. Historically, we haven't had money move as fast as it does. Historically, we haven't had companies transact as fast as they have. Historically, nothing is the same as it has been historically. So these rates are really irrelevant to talk about historically, right? It's interesting. It's a data point, but that doesn't mean it serves today. And you have to look at today and today's point in time and make a decision based off that.
Yes, historically, we haven't had so many old folks. When I was growing up, the average age in the country was 30, and now the average age in the country is something like 41. I forget what it is now, but it's on that
Mm.
around there. 55% of all the wealth is held by people over 55. It's massive, massive shift of the wealth into the baby boomer group, and that's impacting all of this. I
Yeah.
really believe it's really having a big impact. Well, then on the other hand, as the Fed thinks tomorrow, they would say that you already have potentially inflation is already below 2%, according to their own number, the CPE. PCE. I'm always getting that backwards.
Yeah,
The
core
PCE
PCE. Yeah.
or the 3 month and the 6 month is under 2%. You've already got, of course, they've looked at trueflation, and that's well under 2%. And they said they needed to start moving before it got to 2%. You've got commercial building loans that are going to have to be resetting here all year long, and those guys are in big trouble. They would be much better off to have lower interest rates right now. That would maybe save some of the small banks who are also going to be in trouble because of that. And then you've got the government paying these massive amounts of money for interest that just adds to the deficit, which adds to the long-term problem. So
Yeah.
I would hope that those things would also be on their mind.
Yeah, absolutely. I mean, yeah, I mean, yeah, I got nothing to add. Yeah, I agree 100%. Like, yeah, you're spot on.
By the way,
I, I was gonna say, I do think tomorrow we will it'll be the end of the talk of still potential future hikes. That
oh,
will be
oh,
over.
that's true. As a bare minimum, I'm looking
Yeah.
for some kind of dovishness tomorrow at the bare minimum. All right, let's see here. We have got in the after hours, we have Tesla still only down 5.43 now. So people are starting to get, maybe this is not such a big deal. I mean, Elon's not going anywhere, folks. He's not going to quit over this. He's not going to be less motivated over this. You don't know an entrepreneur if you think that Elon would be less motivated by this for more than an hour. He's going to get up tomorrow morning and go, I'll show her. so, so, so anyway, Tesla that's the situation right now. Again, the other Magnificent Seven are doing worse, even though Google and Meta both had decent earnings reports today. Let's take a look at the bonds, though. That is always going to be the tricky one, especially today. As we go into the situation tomorrow, bonds were the yields were down earlier today. They are down another 2 basis points in the after hours. That's the 10-year rather. And the 2-year is also down 3 basis points. So the yield dropping, the difference there, the inversion getting a little narrower there in after hours tonight, or pre-market as they call it for the bonds. But the short terms are still up. Finally figured out, I don't know if you heard this, whether you were on the show that day or whether you might have heard my show. I kept asking people, why aren't the short terms dropping? And nobody knew the answer. We finally figured out that is very definitely Fed driven and Treasury driven, that the Treasury decides how many bonds of each denomination to put out. And so
Hmm.
you get a supply demand situation where you force the short terms to be more likely to be sold off. And that's what we've got right now.
Learn something new every day.
There you go. That was very interesting to me. All right. So anyway, it looks like that the bond market has finally decided that inflation is is beaten. I couldn't believe that it ever went back over 4% again, but markets, you never know what they're going to do. We've got oil up 25. It's sitting at $78. We've got a lot of reasons for oil to be up right now. Red Sea, there's a lot of talk about whether the U.S. government is now going to do something pretty radical in terms of some kind of a military strike on Iran. What have you heard? What do you think?
Yeah, this is confusing me. I mean, the Democratic Party used to be the party of peace and no war, and now war is
Talking.
peace apparently. And the Republican Party used to be the war hawks, and yet Trump is the president of peace apparently. I mean, it's everything is just upside down. What I know is that when there's tension like this, especially in the Middle East, oil prices are up, very up. They get very escalated. Especially, we haven't seen anything like this where now ships are having to go around South Africa to get to their destination.
Yeah.
This dramatically increases the cost. Despite all that, we only see oil at I think 76 for WTI, maybe 78, and
78, 78,
Brent's at 80 something maybe.
83. Yeah.
Not hundreds, not 110, not 120, not 140.
I
This
know.
tells me that if these wars go to resolution, oil is dropping. It's
Yeah,
tanking.
a lot. Yes, absolutely. Not investment advice.
No,
Natural gas
never is.
up, natural gas up a little bit again, but not much. Again, natural gas has really been slapped down, and natural gas also would be affected by the winter and by the all the same things that oil is. Gold up a little bit more in the pre-market 2055, but again, not going crazy. Like sometimes in situations like this, you see, gold, people start looking for someplace to hide. They aren't doing it right now. So, dollar is mixed, it says. So nobody's fleeing to the dollar either. And the Bitcoin, some people are fleeing there. It's at 43,000. So it has finally gotten over the up and down from the announcements and stuff and starting to move upward again. I have no claim to knowing anything about this.
Yeah.
Pre-market, pre-market on the Dow up 11, NASDAQ down 137. But of course, when you've got Google down and you've got Meta down and you've
Yeah.
got Tesla down,
But
so,
Microsoft, yeah. Google, Microsoft, and Tesla. That is the NASDAQ.
yeah, and Meta's down too.
Oh,
So,
is it?
yeah, they're all down big too. It's not like $3, like $8 and $7. So yeah, so the Nasdaq down 138, S&P down 17. So as we uh, as we wrap this up tonight, I always like to go back one more time to Tesla, and it is now $5.42. That's about where it was. So not much movement right now. We'll see what happens in the morning after people have all night to think about this. So I ask you for any last words of wisdom tonight.
How about instead of a word of wisdom, let me just throw another wrinkle of a possibility.
Okay.
We've been talking about the Fed, potential rate cuts. We've talked about earnings, trying to figure out why are we all-time highs. Well, the Fed probably is not going to hint at cuts. They're probably not going to say too much. They're probably going to keep more or less the same. They'll change a word or
Neutral.
two, and yeah, and people read into the change of a word or two. Earnings clearly are just, par. So what else could be happening here? And I heard this on a episode of PBD, Peter Bet David, and I was like, well, that's actually a very interesting perspective. And this was Donald Trump was saying that the reason the market's up is because he's leading in polls, and the
Right.
market thinks that he's going to win, and the market likes that, and that means that there's going to be peace in all these deals are going to happen, and not saying that's it, but it's interesting to take all these different perspectives and just add him into your calculus and just trying to understand what's happening. I never think a day-to-day thing is of any significance, but we're at all-time highs with rates still at what they're at, and in reality inflation, we're not, we haven't seen deflation, as a better way of saying it,
Yes.
right? So
Yeah.
people are still struggling. I went and got a haircut today, and I literally heard some construction people yelling and complaining about not having enough money to go and do something, right? So it's like this is real out there.
Yeah.
And so I don't know, just take it all in. Anything that even seems crazy or outlandish, take it in. Don't be biased one way or another. Anything's possible, everything is possible, but just keep an open mind. That's my words of wisdom. Always keep an open mind. Don't be Democrat, don't be Republican, don't be anything. Just be an open-minded person and make your own decisions based on the data you have in front of you, and question everything, inspect everything, doubt anything, trust nothing other than what you can verify and what you can inspect and what makes sense in here.
Well, see, it turned out to be words of wisdom after all.
Well, maybe it's wisdom, maybe it's not. Find out for yourself.
Sounded wise to me. All right. Nicholas Gibbs, thank you as always for joining me on Tuesdays to bring home the good news. And hopefully we've created some good news tonight. Not created, I'm sorry. We've reported and analyzed in a way that was good news tonight. And until we see you again next Tuesday, thank you so much for joining us. And to all of you out there, it's been great talking to you.